Okay, UniWhales DAO. We have Hendrik Hofstadt out of Berlin, Germany on today's call. It's been a very eventful week, right, with some issues with the Solana blockchain and also the announcement of Jump Crypto. I had to update. I don't know. Are you Hendrik Hofstadt of Jump Trading, or are you now Jump Crypto?
Jump Crypto officially
Jump
now.
Crypto.
Yep.
Okay, yeah. Had to revise that. And so a little bit about Hendrik. I mean, he is a cybersecurity guy, InfoSec guy through and through. I believe even you were in high school when you built a cyberbullying prevention app. So you've just been building things, and you're going to continue to build. I mean, you've picked an industry that will never run out of work.
Absolutely. It's been impressive, like how many new things like are happening in this space and how many new opportunities are created for us to just keep on building. I mean, my start in the whole space was with Certis One, which is a validator operations company I founded in 2018, where we've been starting the Cosmos ecosystem, running validators there, and then expanding to a couple of like high quality chains. We've always been very picky in which chains we join because we like to really dive deep. I think that comes from the cybersecurity background. Like when we joined the network, we're like looking at the core code, doing some auditing on our end, like spinning bug bounty programs and trying to understand the node software before we like publicly offer to run it professionally as Certus. And I think this was our entry point. At some point, knowing these systems so well, like building on top of them was just the natural next step. And last year we started that with the Wormhole Bridge on Solana, which has been one of the ecosystems we've been most involved. And then earlier this year, Certis One got acquired by Jump Trading back then. And now with Jump Crypto, all of our contributions have merged into that organization. And we're just like with the team super actively contributing to a bunch of partner projects that we're strongly involved in.
Amazing. And so, yeah, I mean, let's go to Certis because let me see if you can see my screen here. But Anatoly made a very, very positive tweet here. Comparative outage NFTs. Certis needs a medal. Why did he give you guys that praise?
I think we've always been very close with Solana Labs and the Solana Foundation because in the early days, like Certus One, which was Solana's first like big testnet, and also like adversarial testnet, we were participating very actively. We were doing a lot of security research. I think Leo was, responsible for like the first 10 or 20 submissions to the bug bounty program back then. And that means like from the Certus days, but also just the team at Jump Crypto knows the Solana software extremely well. So in that situation, being an active community member in Solana, we just hopped on a call with them, looked into the things, went together with a couple of other validators, investigated the situation, and started thinking about a way how the network could be restarted. In the end, with the other validators together, working out the plan to do the restart. So it's really been like, I've seen a lot of criticism about like centralized restart and everything on the Solana network.
Sure.
But truth be told, it was a bunch of validators sitting together with some of the core devs, thinking about how we can bring that thing back up and bring it back up so that it doesn't crash again, so that we really resolve what has been causing this issue. And yeah, we've been like knowing the software very well and knowing the processes from the Certus One days back then. Like we've restarted the network a bunch of times. Like it used to collapse every now and then, especially when it was very, very like alpha stage software. Knew the processes, so we've been helping like write that guide to do the restart and lead the community to do the restart. So I think that's probably what Anatoly is talking about. And it was really, I think it was amazing to see everyone come together and just actively work on this and very productively work on this. It wasn't like this was super rushed. Everyone was like very concentrated and focused on getting this back up in the best way possible.
Yeah, so a couple of things. One, if you're not getting criticized on Twitter, you're just not really building anything, so don't worry about that. Two, so I've seen some people have said that like in terms of profitability, how profitable is it for Certus to run a Solana validator at the moment?
It is highly profitable. I don't know the numbers exactly, but we're one of the top 20 validators, obviously. So we can, like with the commission rate that we're charging, easily cover the costs. A lot of the criticism stems from like increased Solana prices, and this is also a point that commonly comes up on Twitter. It's Solana consensus, so validators agreeing on which blocks are valid. That happens via transactions, just like every other protocol would be using Solana. The consensus happens in protocol, in transactions, which has been part of why the audit was happening in the first place. But essentially, these transactions have become increasingly expensive. I've seen numbers of 1 to 2 SOL per day for running the validator, which at like $155 is quite a bit. So if you are one of the validators in like rank 2000 with very little delegations, I haven't actually run the exact numbers, but you might just be running profitable or not profitable at all, which is obviously why justifiably people say it's hard to run a validator. You need to be a millionaire to run a validator because you need to own enough SOL that it actually pays off. And I think it's true in the sense that not every holder that has just bought like 10 or 100 SOL on a marketplace should be running a validator, and could run a validator profitably. But I think, and this has been the story of Certis, like we were never whales in an ecosystem. Like we started, and I think neither Leo, my co-founder, or I were holding any crypto when we started. We just attracted delegation by showing technical excellence and attracting delegations of other people. Like it's people electing you, and by that you can increase profitability to an extent that it makes sense. But truth be told, I think Solana at this point isn't an ETH2 where you will have 100,000 validators, but it's gonna be like operators with really high performing hardware. And it's going to be potentially a couple thousands of them, but each of these need to be experts in what they're doing. And I think this is important for the network to perform as it's supposed to.
Yeah, and I'd like to add too, I think when people do these calculations on Twitter, and it is really good though, I do appreciate when people say, it could be costly, and I think the guy from Avalanche has tried to make some constructive criticism, but they forget about the delegation and the commission fees, right? So Terra as well, right? And most of these proof of stake, you choose a validator, right? You log on there, some will charge 0 commission, right? Because they may not have the reputation of Certis, but some might charge like a 3% commission fee, and that's, I think, maybe underrated when people are thinking about a validator profitability, the commission.
Absolutely. There's people that have attracted delegations by, not just showing technical excellence in like operating infrastructure, showing they're secure or anything, but being active in the community, being a protocol that is building on top of it, people essentially sponsoring it. I think there's ZK validator, by delegating to them, you essentially sponsor ZK research. All of these models have seen good success in the space, and I really think that obviously with ETH2 and consensus protocols like Avalanche, I think even Algorand, there's this thought that everyone would need to run a validator themselves. Truth be told, on ETH2, if you look at the lion's share of validators, they're also run by a couple companies. So essentially, even though there is no delegation in the traditional sense, you will see that a few companies will just end up running a couple thousand validators. We alone are running a couple thousand. So this doesn't necessarily mean it's more decentralized. It is for sure if everyone can run it, especially from a censorship resistance.
Yeah, because Anatoly always talks about a laser focus on censorship resistance.
Yeah.
I do think perhaps though I don't want to say outdated. That's not fair because, like you said, there are some benefits when anyone can be a validator. But a lot of this comes from the original Bitcoin ethos, proof of work. Anyone should be able to run their own node. And that ethos to completely different blockchains in a lot of ways has kind of carried over. 10-minute blocks to the millisecond blocks on Solana. So I'd like to, and so Certis, great stuff there. Let me ask you another question. In terms of, jump trading or jump crypto, I guess jump trading is still part of the umbrella. How did they reach out to you, and why do you think they recruited you and kind of acqui-hired and or acquired Certus One and brought you onto the Jump team?
Yeah, Jump has actually been a customer of ours in some fields of operating nodes. We've been in close touch as well for a while because at some point we realized that we were looking at the same protocols and focusing on the same protocols. made some similar decisions in where to focus on in the space. And that's why we were in close touch then with jump trading starting to contribute to Pith. We had a lot of overlap on the Wormhole side of things, which with Certus had been building in the last year. And that at some point just apparently got to the point where they were like, why don't you join us, guys? We want to get strong on the community side. We want to get more public about it. And we think Certus is a great fit. The Certus brand with the technical sophistication that people associate with it and the building aspect, we can help you guys scale that even further. And I think that's what's happening right now with Jump Crypto.
Yeah, it's amazing. What a great story for you for this year. It's amazing.
It's been really amazing, and it actually it paid off for us. And what I need to say, from a CEO perspective of Certus One, we've always been very laser focused. Most of the things that have been happening had still been founder run till the end by Leo and me, and we never scaled the organization. And with Jump's expertise in just scaling things, I think this has really been rocket fuel for us in also growing our engineering and essentially helping us get more people to work on the problems that we wanted to solve. We had this huge wish list of things we wanted to do, but we didn't have the resources to kick it off. And honestly, we didn't have the experience of scaling an organization to that extent, being first-time founders. And now with Jump's expertise, it's been really amazing story.
Gotcha. Yeah, and so I want to move into Wormhole, right? Because I don't know if you saw the tweet thread. Twitter's just kind of documenting history here, but Rune of Maker basically made the point. He said, current bridges, maybe excluding Wormhole, but excluding Wormhole, it's interesting because usually it's locked in a multi-sig and then bridged over. So for Maker, if they were going to bridge, to Solana, in a traditional, the way most bridges have been today, then there's this, it's always a wrapped asset. So in terms of decentralization and security, it would be preferable that someone launches a native stablecoin on Solana, right? Terra, which we'll talk about a lot today too, because I know Jump mentioned in their tweet there that they're also interested in Terra. Is a blockchain with built-in native stablecoins, which really I think is quite conceptually different from everything else. So how do you look at the I mean, maybe just tell us about Wormhole V2 and the security risk and, being a validator on the Wormhole network. How does that profitability look? How, do they share in the bridge fees? It would be really cool to get a in-depth look at that.
Yeah, totally. So Wormhole V1, just taking a step back and looking at the original protocol we built, was essentially it happened on, I think it was a Saturday, sometime in fall last year, when Anatoly called us and was like, hey guys, we have this huge partner coming to the Solana blockchain, building an exchange. We need assets there. Can you guys build a bridge? This huge partner turned out to be Project Serum and FTX. And we were like, wow, okay, this is amazing. As I said, we've been very picky. We've not been scaling the organization a lot personnel-wise because we were very laser focused on quality of our validator operations. But then we knew, okay, this is a great opportunity and we've just the right skill set to do that. So we started building the Wormhole V1 bridge, which was an asset bridge, just like you mentioned, and as was mentioned on that tweet thread, with wrapped assets. Essentially, right. Assets get locked on one end, a set of off-chain oracles observes the lockup. They do an essentially multi-sig or threshold signature. We're not using threshold signature, but essentially multi-sig, 2/3 plus of all validators need to agree, and then wrapped tokens get minted on the other end, and then obviously you have the path back. That was very simple protocol. We built the backend for that, and then the community kind of built a bunch of implementations for front ends. We also put a reference implementation out there, more developer style, and we're focusing on maintaining the backend. Well, it turned out that that's having a lot of other people build a front end doesn't work out that nicely always. Some of these front ends weren't actively maintained in the bridge. It wasn't a fully conclusive product in the end. We had transfers that got stuck because there were UI bugs mostly. Protocol was performing nicely. We were happy about that, but still we had seen a lot of unhappy users using the token bridge. At the same time, we got a lot of inbound interest in, hey, we want to bridge NFTs, especially in like recent times. We got a lot of inbound interest back then from Pith protocols, like we want to bridge our Oracle data to other chains. And we use the Wormhole. We're like, theoretically, we have this set of oracles that observe these chains for their finalized state and for these events. But we built the protocol specifically for transfers, also due to how like quickly it was built. There was no time to design a fully generalized protocol. Like, okay, we need to go back to the drawing board, take some of the learnings we had in the V1 and design something that is very generalized. And that is what the V2 is. Essentially, it inherits all of the properties of the V1 when it comes to like trust assumptions and this oracle set. We still have a set of 19 what we call guardians, essentially validators, observing chains, running full nodes for all connected chains, and watching them for finalization in their consensus or probabilistic finality and proof of work chains. So like 15 confirmations for token bridge or these things. So essentially saying, okay, after 15 blocks, we won't roll back. Similarly to an exchange. And we have this set and they observe right now Solana, Terra, Columbus 4 still obviously, Ethereum and Binance Smart Chain. And what has changed is what they attest is no longer just transfers, but on each of these chains, there is essentially an endpoint, a connectivity smart contract. And all it allows you to do is post messages. So each of these contracts has a method that allows you to post message. You can put arbitrary data in there. And then it posts a message to the wormhole containing which contract sent the information, which chain it was sent from, when it was sent, how many confirmations the network waited. Like you can specify, I want the guardians to attest it after 1 block, after 15 blocks. So you can think about like security of each of these chains and when you feel comfortable about an event being finalized if it doesn't have instant finality like a Terra with tendermint consensus. And then this message gets posted and attested by these guardians. And they produce what we call a VAA. It's essentially just that message with 2/3 plus of signatures of these guardians. And then you can go to the endpoint on another chain, which has a verify method that can take this signed message, this VAA, and verify it. And then your smart contract can do anything it wants with that information. Take an example, token bridge. The token bridge, you lock assets in, like 50 wrapped ETH on Ethereum, and you specify, I want to send that to that address on Solana. Then contract looks at that, takes your 50 ETH, locks them, posts a message to the wormhole contract. Message is attested by the guardians. And then, okay, user observes that in the wormhole network so they can see the message. Then they take this as kind of a check and claim it on the Solana chain and get that recognized. So we abstracted the token transfers away from the core messaging, which is now more similar to an IBC or XMCP on the Polkadot side, even though it doesn't have any specific delivery guarantees. Essentially, I sometimes jokingly say it's like an off-chain light client network, which is essentially true. We allow people or programs to verify state of other chains without running a light client by trusting in the 19 guardians.
Right.
And you can build anything with that. Token bridge, you can do the same for NFTs. You can have an Oracle post data to the wormhole contract, which is going to produce an Oracle, like signed Oracle price statement that you can take on any other chain. So multicast essentially. For example, Pith protocol posts information on Solana of, let's say, price of Robinhood stock, and it's attested by these guardians, and then any chain can set up their own relayer and consume that information. In order to receive, you don't need to be a fully supported chain on the wormhole. You just need to have a contract that can verify these VAAs. No direct connectivity needed. The direct connectivity with the guardians only needed if you want to send messages and they need to observe state.
Gotcha. Can receive but not send. All right, that was a lot of really. I want to break that down. Make sure I got everything there. So okay, obviously Pith is kind of, for people that aren't familiar with this, it was kind of like the chain link of Solana for Oracle solution on Solana, right? And obviously I think you guys are it's going to be heavily involved with Wormhole if we're in a multi-chain future, right? And so instead of a traditional kind of multi-sig contract, and in this case, it's 19 guardians, right, who are storing these assets. Now, is it permissioned? If let's say Carl of our DAO said, "Hey, I'd like to become a guardian," can he do that? Do you have to apply to, like, how does that process work?
Mm-hmm. So right now, it is kind of a DAO. It's controlled by the 19 guardians. So the 19 guardians can choose to add someone, remove someone. You need a 2/3 majority. Essentially, the protocol governs itself using wormhole messages. So if you construct a valid wormhole message with 2/3 plus of signatures saying, I want to swap out guardians, then that's valid and that's going to be executed. In the midterm, there's plans to move to a model that is closer to traditional DAOs, I'd say, where there's it's not permission per se, but where there's an option for more participants to participate in the protocol, where these 19 guardians have essentially been handpicked to be very trusted and very public actors, kind of saying proof of reputation, essentially, because it's true in all proof of stake systems. As much as there's the economic security built into the protocol, you also now have companies valued at a couple, I think Figment just raised at a couple $100 million valuation. Like you have these companies putting their reputation up when they run a validator. So I think this is what we have right now, and there's obviously an option for this DAO right now, these 19, to adopt a different model, potentially token-based model, potentially totally different model. They have the power over the protocol.
Yeah, gotcha. And so I'm guessing it's for performance, right? Because ideally you'd want to have more guardians, but because it seems really challenging with the different blockchains and consensus to run this in the first place, which is amazing that you're building this. But if there were to be 200 guardians, then it would be difficult. I guess speed would be compromised.
Yeah, truth be told, right now 19 is kind of the sweet spot because you need to attach 2/3 of these 2/3 plus of the in signatures to the transaction, and these transactions become really big. So and they become expensive to verify in Ethereum. Like you're paying for the data in the transaction. You're paying for the signature verifications. 19 was kind of the sweet spot for Solana as well, where a transaction is limited essentially to the maximum packet size of the network. So that's kind of an issue as well, because we already need to shard signatures across multiple transactions. So there's we just put out the example implementation of the Wormhole token bridge. I expect that there's going to be a UI very soon. For that one, someone's going to host it somewhere, and people will be able to utilize Wormhole V2 with the token bridge implementation. There, for example, you'll have to sign 3 transactions on the Solana side in order to claim your tokens, just because we need to shard these signature verifications across multiple. If you scale to 200, you'd probably have to run 20, 30 transactions in order to verify it. And that's obviously not good UX. So we're looking at different technologies, obviously. There's an extremely amazing progress on threshold signature schemas where essentially only a single signature would need to be verified with BLS, but also with Goldfeeder and all of the amazing research that's been done there. For example, Thorchain is using some of that, and they've built amazing reference implementation for some of that technology. We kind of follow the keep it simple and stupid principle of using the most simple thing at first, and then as the protocol gains adoption and as there's more demand for getting more than 19 and improving on that front, adopting more complex mechanisms. They are really complex. They require strong economics as well, because when you have these threshold signature schemas, you need to do coordinated key generation across all of these guardians. Let's say we have 200, then these 200 will need to coordinate with each other to generate a key, which is then essentially going to be used for the signature. And each one holds essentially a shard of that, very high level. And in this process of generating the key together, in this distributed key generation, there's a lot of abort scenarios where someone who's malicious could abort the process, and then they need to be kicked out, they need to be slashed and punished. A lot of complexity in there. We want to design a protocol that is easy to verify, audit in the first place, And then as research progresses on threshold cryptography, as strong reference implementations get built, we'll explore looking into them and adopting them to scale beyond 90, taking one step at a time.
Yeah, I really like that pragmatic approach. I think sometimes there's some really brilliant people who launch projects, but they maybe, I don't want to say idealistic, but they'll launch something where the tech stack's not quite there for it to work. I mean, what do you think? I think Thorchain's really cool by using native assets. Are they too early? Do you think do you still? Obviously, they've had a complete overhaul in security, and they had some hiccups, I'd say. How do you look at Thorchain?
I think it's an amazing implementation. I think it's not too early. I mean, they've been kind of building one of the first implementations of their TSS, the threshold signature schema. It's obviously it went from research, and they kind of built one of the first production implementations. So from it, security researchers' perspective, obviously this is slightly scary because there might be a paper coming breaking the thing. We've seen that with for example, the VLS curve that's currently supported in Ethereum with a precompile that Ethereum can natively verify from within smart contracts. I think that lost almost 50% of its de facto security bits just from new papers coming out attacking the protocol. And such things could obviously still happen. It just needs a bunch of grad students. I'm not saying it has to be, but there's the option. It's not battle tested. Still, I think they've built an amazing implementation. I have a lot of trust in these particular mechanisms, and I think using native assets, it's a great use case. It's absolutely valid for everything that touches BTC, for everything that touches chains that already have valuable assets. But obviously, there's a lot of chains where they want their assets to flow out. For example, at Terra, they want their UST to be used in the. It's not going to happen if you just swap. You need a wrapped asset. You need UST to live on multiple chains.
Right.
And I think this is a use case that they obviously don't address, but where a wormhole fills the gap. Not saying that Thorchain has a totally valid use case with swapping. I think as ecosystems mature, the swapping will become more interesting to users than potentially some of the wrapped assets. Not saying a UST. I think that has a reason to exist for a longer time. But bridging for example, a comp into another chain, that's interesting in the beginning when a DeFi system is being bootstrapped, but later people will want to have the real thing that is voting power. Or protocols like Wormhole will be adopted to do cross-chain governance, where you can, I think this is one of the most, things I'm most excited about, is people using this messaging mechanism to essentially give people that hold these wrapped assets on other chains their right to vote. Someone on Solana maybe holds a smaller fraction of comp than in the future, and they might be able to vote with a lot less gas usage, and they should still have the right to participate in governance. I see this being possible as well, and a possible outcome, essentially multi-homed coins. But therefore, I think these bridges need to really mature, and so does the wormhole. It's also still early. There needs to be a canonical version of a wrapped asset that's acknowledged by everyone.
Wow, so there's some great thoughts there. So two things. One, I think you're right that it's easy to think, native assets like BTC. You'd rather hold native BTC than wrapped BTC, but something like Terra, right? Unless you would have the mint and burn mechanisms on other chains, you have to have wrapped UST being used, and so their approach is just really fascinating. A question here from Carl. I don't know if you saw this, Gavin. Kind of related to what we're talking about, Solana as well as Wormhole. If you can't run a full node yourself, then it's just another bank. Gavin Wood. So I mean, he said that. What are your, why do you think he said that? And what are your thoughts on that?
Yeah, I think I want to preface this with I'm not a maxi for any chain. Right. I think there's a world where a Solana and a Polkadot and a ETH2 can exist. ETH2 is probably going to become, and essentially already, one of the most decentralized networks. Token distribution is amazing. Also one of the aspects that's commonly criticized and validly criticized on a lot of these new L1s, where there's a lot of token holder concentration among early investors still that potentially sometimes haven't invested even yet. and ETH has like incredibly good token distribution. It's super easy to run a validator, and I think it's gonna stay the de facto home to tokenization. At the same time, looking at a Solana, because that was brought up here and brought up by Gavin. Let's say there's 100, like there's only 100 validators, quite similarly to what you have, I think, on a Terra and on a Cosmos, for example. If you have these 100 validators being operated by sometimes entities that aren't known, entities in different jurisdictions, like if I want to shut my bank down, I'm gonna go to the bank, knock at the door, and shut it down as a regulator. If I want to shut a Solana down, right now I think there's 1,000 validators. I think that I'm not actually. I think we actually checked. I think it's 83 validators that hold roughly 2/3 of voting power.
Okay.
I think that's what we've been looking at this because that was the number required to boot the network back up. But I think these 83, 85, something along these lines. Some of which are not public, like there's no name attached to them even, there's just an address, there's just a pub key. Like go find them, go shut them down. It's not gonna be that easy, I would say. So there can be that aspect of decentralization, even if the entities were known. Let's say there's obviously top 20, you usually have these well-known actors that we talked about with essentially proof of reputation as well attached, like a Certis One, like all the other large validator companies out there. There are different jurisdictions. Like go shut all of them down at once. I think you're gonna have a hard time doing that, especially as, and that's actually one interesting thought on Solana in particular. Solana has this high entry barrier for hardware. That is true. You need ridiculously powerful machines. Like we're running machines with a terabyte of RAM and like the best CPUs money can buy you right now. In order to like provide best performance to the network. But actually this forces people to go back to their local data centers and host their machines there. And they sometimes won't be able to run them on AWS. Like we commonly call out people that are running them on AWS and Google Cloud, like not gonna do that for a long time because they just won't be able to keep up with like on-premise high performance hardware in that environment. And especially if you need GPUs as well, there's ways you can get that in the cloud, but you're usually like limited. If you need single core, extremely strong single core performance, you're gonna have a hard time to get like a water-cooled 5 gigahertz CPU at AWS. And I think in the long run, some of that is what's gonna be required for a Solana. That means there might only be 200 or 300 validators, but they will still be spread across the globe. They will still be like sometimes anonymous, and that will still make a censorship-resistant network and a network that is definitely is censorship-resistant, hard to shut down, and especially hard to manipulate, interfere in. And like an ETH2 node, you can run in AWS. Like there's other factors. Like people are running them in their basement on a Raspberry Pi, and I think that's impressive. And it's always going to be a point where Ethereum is going to be significantly better than a Solana, if that is what is important for your use case. But if you want really high performance, you need that strong hardware. And I think you will still have a sufficiently secure network with even 100 or 200 validators, just for the reasons I laid out. But that's like my personal opinion there. I like to be practical and not that like ideology driven of like, we need everyone, like network of the people. I think that's not going to happen. There's consensus mechanisms. They can get extremely good performance with a lot of people, but they often involve some kind of sharding in some sense. Even if it's the same network, there might be like hidden sharding of like some pieces of the network can't communicate with each other. There's multiple chains internally. With the Polkadot, you have individual networks, like in Cosmos, you have individual networks. I think this is cool. Like separation of concerns across multiple chains. But there isn't gonna be like atomic interoperability like we love it in Ethereum world, where one contract calls into the next atomically, and it all gets executed in like one block.
Gotcha. Man, that was a really good point. I've never heard people talk about that because of the really high hardware requirements running it locally, and people think, oh, you can just shut a validator down, like the U.S. government just calls like the person in Kenya is like, yeah, you need to shut down your validator right now. It's obviously not that simple, and it might take months and months. And if you know that they're going after you, then you can take measures. So yeah, it's I really appreciate you sharing that. And great question, Carl. So yeah, let me ask you a question. Okay, so with this, not just Solana, right? We know that bridging is risky. Like the traditional multi-sig, right? There's an obvious security risk there with, ETH to Polygon, et cetera, et cetera. Thorchain have had their hacks as well. So there is compared to just natively holding an asset, there is an inherent addition of risk when you bridge, right? And so what, like, I guess almost like, are there going to be situations where there's like chain rollbacks or, where the blockchain's pause? Like if I had initiated a bridge from ETH to Solana or Solana to ETH during the time that Solana wasn't working, I guess on Solana, simply Solana to ETH, the transaction wouldn't have gone through. So it just would have been there. But if I would have initiated from ETH and was waiting for the confirmation on Solana, what would have happened to there? Or maybe there were some transactions that got stuck in the Wormhole bridge during the quote unquote shutdown.
There was some on the V1. The V2 reference implementation we contributed to has a recovery mechanism. So what you would do is, since we have this essentially, like as I mentioned, you deposit assets on ETH, like you want to transfer your 10 comp, you lock them in, it produces this message that gets attestated still. Like ETH's still running, ETH is finalizing, ETH reaches that 15 block threshold. The Guardians pick that up, they produce this message, and it's going to be there for you. You can still fetch that 10 hours later. This is, for now, we have a permanent persistence of these VAAs in the network. You can just fetch it from Wormhole RPC. You could run your own node. You would archive that VAA. And that VAA stays valid. So the moment Solana comes back up, you can take your check and you can cash it in on Solana and redeem your wrapped assets. If there was a rollback of more than 15 blocks on ETH, of course, you would end up with wrapped assets on the other chain. Even though they might not actually be locked in the contract there. I think this is the risk there. I think it's highly unlikely 15 blocks would get rolled back on Ethereum, but talking about MEV, talking about like time bandit attacks and all of these fun things, I mean, the risk is probably higher than it was a year ago, but also the ETH network and hash power has just grown, and it's probably also, this is a factor that battles the increasing risk from MEV interests. Generally, it's a property that the DAO controls, and essentially the DAOs and the users accept that risk when they transfer across the bridge. If you use, let's say someone deploys the Wormhole token bridge now, and they set 15 blocks, which is, I think, the default in the reference implementation. This is the risk anyone using it would accept, but it's changeable. Like someone could say, if the hash power decreases and the risk of rollbacks increases, then people could obviously change that parameter. It's a parameter governed by the protocol. And I think these things need to be watched closely. I think it's less risky with a lot of the POS networks we're connecting to, because we often have instant finality. Or we can like cryptographically prove finality, because otherwise the network would get slashed, or a large fraction of the network would get slashed. But this is a risk that everyone needs to accept in using bridges that have wrapped assets.
Gotcha. And okay, so I appreciate you explaining that. And also with NFTs, right? So like the NFT bridging, like let's go into that, because you did explain that a little on the Luna, because you have like on Cosmos is what, like the CW 721 implementation. Obviously Solana has its own, and Ethereum. Moving this digital collectibles or the many use cases for this around. I mean, are there any what's really interesting about Wormhole is like you can, especially version 2, right? I can move, because I know version 1 there's a limitation on the assets, but with Wormhole V2, you can move an asset from Terra to Solana, and then Solana to ETH, and ETH to Binance Smart Chain. You can move it around. It's not like a two-way. It's a multi-directional bridge, which is really, really fascinating. I mean, the same thing is going to be there for NFTs. You mentioned for ERC20 token. Well, I think I'm native to Ethereum, like that type of governance can be an off-chain for throughput and transaction costs. What do you see in terms of cool cross-chain NFT use cases?
I think, first of all, obviously you have users that are only on, like with, especially with the whole NFT wave, we're starting to have a group of users that only uses one of the chains, and that chain might not be Ethereum because they got in with like 20, $30, and that would pay you one transaction on ETH, depending on what you do. They are just on Polygon. They might just be on Solana, but they still want to have a CryptoPunk. They still want to have access to all of the cool NFTs that have all just been created on Ethereum. I think this is one of the first use cases of making them available to this new group of users. And like my team's currently working on a reference implementation of NFT Bridge or using the Wormhole protocol. I think obviously like this is what's going to be enabled is just sheer movement of them across chain. I think where things will get more exciting is when all of these sub protocols or extensions get implemented of like royalties. There's severely different mechanisms on each of these chains. Solana has a concept of how royalties are implemented. Ethereum has a concept of how royalties on NFTs are implemented. Translating between that is going to be a very, very tough job. And
Can you give me a little bit more context on royalties? What you mean by that?
Oh, royalties. Like, for example, on Solana, you can specify the creators of the NFT that are tagged on the NFT. And you can specify like, okay, if there's a sale of this NFT, like 5% of the proceeds go to the creators of the NFT. And this is hard coded into the protocol. And there's extensions on Ethereum as well of NFTs that implement a similar concept in case the exchange that it's traded on supports it. Being able to translate between these concepts with people have like being multi-home, like there would be a Solana recipient address on a Solana NFT for this cut. What happens if that token is on Ethereum? What happens the other way around? Like these are going to be like, we have different address schemas. We have people that just don't have wallets on the other chains. Like how are we going to translate with that? And I think the biggest challenge is not just going to be like the plumbing that we with the Wormhole, for example, producing and working on components of. Going to be a lot of the UX story on top. Wallets being multi-chain capable. I think this is what I think is going to be the biggest challenge, translating between these things. We can build the plumbing, we can build all of the low-level protocols, but still you're going to require, just yesterday I did some test transfers, and you end up sitting there with two ledgers connected to two different chains, because otherwise you need to switch your ledger apps, and you want to do these swaps securely with a hardware wallet. Good luck with that. You will always need to swap apps. Maybe the hardware wallets will develop further to have like more universal apps. Like on the ledger, I'd need to switch between ETH and Solana. I hope that there's going to be a revolution on that side of things, an evolution on that side of things, improving UX in a multi-chain world. That's going to be important for NFTs as well.
Yeah, so Carl just shared an amazing comment there in the chat. Yeah. I didn't know this, that there's a handshake deal between OpenSea and Polygon that's not hard-coded into the Polygon NFTs. I didn't know that. So that really goes to your point there, Hendrik.
On what? Was it on the royalties?
So on the royalties for OpenSea and Polygon. I did not know that. Thanks for sharing that.
Neither did I.
Yeah.
Interesting.
I got to bring Carl on for a whale note as well. And so let's go to just the blockchain infrastructure projects. I mean, what are some of the most just interesting Web3 infrastructure projects? Because there's so many of them, and it's kind of hard to keep up with it. But what are some ones that have kind of caught your eye?
Could you elaborate a little bit what you specifically mean with infrastructure? Because like coming from a validator perspective, obviously I have a specific thought of what infrastructure would mean.
Yeah. Okay. So I would think maybe like the graph, Akash network, those types of projects. So I'm keeping it pretty open-ended there for infrastructure.
I think especially like picking up on the graph. Having that distributed data layer is extremely important, especially on a chain like ETH, where some developer where storage is extremely expensive. Persisting information forever is extremely expensive. Let's just take the simple use case of I want to get all of the ERC20 balances of a user. It's there on Etherscan, but if you look under the hood of how that needs to be implemented, good luck building it yourself. Because what you'll end up doing is watching the whole chain replay and look at each ERC20 mint, burn, and transfer event to reconstruct your balance. Because especially if you want to look at historical balances and to figure out which tokens you even hold. Just half a year ago, I did we actually contributed to the Degen score on Ethereum to some of the backend, and we needed to fetch the balances for all ERC20 tokens on your account. But how the hell do I even know which tokens you hold? I need to look at all logs of ERC20 transfers on your account, need to do a full scan on my archive node in order to even figure out which tokens you hold. Then I need to query each of them. Extremely complex. And how do you make that such that it isn't centralized? And I think the graph is a great attempt at that. Covalent is quite amazing as well. I know that they've raced for the token as well and are starting to decentralize their API offering. I think this is an important layer, but so is RPC. I think this is one of the things I'm most concerned about often is like in the early days of MEV, who would have been the best player to do MEV extraction? Infura. Like, who do you send your transaction, your trade before it happens? It's Infura. They held incredible alpha. They just never made use of it, to my knowledge. But having
OpenSea.
pull in OpenSea. Having that kind of intel is extremely valuable, and making that having a trustless setup there, or more trustless, I think is still one of the partially unsolved problems. There's a lot of projects attempting it, but there was no big breakthrough. People still use Alchemy. People still use Infura. I've seen few players actually using decentralized RPC. And I think this is where I hope a lot more to happen, especially on networks like Solana as well, where running a node is more expensive than it would be on the other networks, where economics really need to work out for you to have a decentralized RPC infrastructure. So this is actually one of the things I'm most excited about to see how they will develop. Like Pocket is one of these solutions there, but none of them have really taken off. And I'm quite excited to see how this will play out.
Gotcha. And so talking to people, some people have this view of jump trading. And so my thesis here is there's a lot more than this, that they're incredible traders. Obviously, some of the best in the world, offices around the world, really sophisticated, not just in crypto, but in traditional markets. They got into crypto. They see Solana as high throughput. This would be great for things that are similar to high frequency trading. But I think there's a lot more to jump. So I'd like you to talk about some interesting conversations or philosophies that a lot of people don't know about the jump trading ecosystem.
Yeah, I think before I personally also started working closer with jump trading. I always had that thought, and I think it's still picked up in that way of like, oh, jump trading, traditional HFT players, they see Solana, they say they want to be the decentralized NASDAQ, we go there, and we put all bets on this one horse. Obviously, that's not true. Solana is a close partner. It's a project that a lot of our other partner projects and our open source contributions contribute to. But at the same time, Jump has been involved in so many projects and contributing to so many projects, also in the traditional ETH world, just during the time where it wasn't that vocal about it yet.
Right.
There's obviously Jump is known for doing all the market making, the trading. That's the one part. But especially in the last 12 months, there's been a huge shift, which in the end led to going public with Jump Crypto, of in-house us building things, us working on contributing to protocols, getting into governance, and helping these protocols grow and improve. With the power and trading we have and our understanding of markets and experience in markets, like when you're designing an options protocol, Jump's been trading that for a long time.
For sure.
If you think about any financial instrument, there's experts at Jump that have know every detail about that particular financial product. And I think this is where we're really starting to flex our muscle now with Jump Crypto, being more public, being more outspoken, starting to write pieces on our blog, starting to openly contribute to protocols. With our engineering team, there's been an incredible growth. You've probably seen the announcement of, I think the announcement says 80 plus people, a lot of them being engineers, and more people than you think actually doing open source contributions to protocols. And a lot of that's going to be a lot more public. And Jump Crypto isn't a isn't a brand that is like should only be associated with a single protocol. I think the root in it lies in growing the pie. Crypto is a market, like compared to traditional finance, where actually growing the pie will help expand the business significantly more than it would in any other space. There's so much growth in the space. I think we really want to be the catalyst for that growth in any way possible. Let it be engineering and open source contribution. Let it be protocol design, using some of the experiences the core of junk trading has, but also obviously in trading and making markets stable and helping in making that possible.
Yeah, very cool. And where do you see, Wormhole, let's say 12 to 18 months from now? Like, what are some of your goals for that?
Yeah, I mean, it's in the hand of the guardians now in what changes they adopt. I think contribution-wise, what like my team and I want to contribute to a lot is like, make the core really stable, make sure there's strong reference implementations, and these are actively maintained, which means actively listening to input. Like, there's a good reference implementation for the token bridge now. There's been a lot of outcry about the V1
Hendrik, sorry
token.
to interrupt you. I think I may have asked this or I forgot, but real quick, just to make sure, like a basic thing that to clarify, in Wormhole V2, the guardians receive a share of fees on each bridge transaction. That's how they're incentivized to maintain the network.
The token bridge is a protocol layered on top, so they don't receive a share of tokens transferred. But each message you post on the wormhole, there's a little fee being charged in the native token, for the reason that obviously if you make a transaction, you will hold some native token on the chain to pay for gas fees. So you will be able to pay the wormhole as well. This is what's happening right now. And there's no distribution mechanism yet. This just accumulates in the early stages. And then as the protocol further develops, there's going to be mechanisms to make that distribution happen. And to improve the economics, also, as I said, allow for more guardians and for the ecosystem to thrive and decentralize further. And part of that, coming back to my point before, is getting more outside, getting like more, let's say outside, there's no outside. We are outside contributors. We like strengthening the open source ecosystem, not the wormhole. People building on top and B on the core protocol, but at the same time, having these strong reference implementations. I was just pointing out, V1 had seen a lot of outcry of transactions getting stuck because the UI was broken. And I think this time we really want to make sure there's a lot of people focusing on supporting the reference implementations that are out there and actively listening to feedback on improving on that. Like, core infrastructure is the most important. Then in the next step, building the tools that will allow this to grow to more than 19 guardians. And as the community demands, like there's Swim protocol now building cross-chain asset swaps using a wormhole message passing. But if there's
how do you spell that? The
swim.
Okay, as in
like
swim.
swimming.
Yeah, gotcha.
They are building cross-chain asset swaps using the message passing mechanism. But some of the really core things, as like the highest demanded things, we'd obviously like step in and build reference implementations for as jump crypto and contribute. Like with NFTs, that's been something highly demanded. At this point, like having contributed a lot to the core, we just know it very well. We can build extremely fast. That's what we're doing. And that's what we're going to be doing. Like there's going to be a lot of engineering power here dedicated to maintaining. I always want to stress that because I've seen a lot of things where people like, hey, I built this today, this tomorrow, new protocol. Not going to happen here. Like strong maintenance on all of these components. I think this is what we're going to be focused on. I'd love to see in about a year of time, the wormhole like have very solid economics in like how the fees are distributed and how the fees are collected. So we can also like easily adapt to more networks because each networks means one more node to run for each of the guardians, and there need to be strong economics for that. And I think this is something where a lot of work will flow in to make the wormhole the hub to connect all the high value chains out there. Because this also makes the wrapped assets of a token bridge more valuable. If you want your wrapped asset to be the canonical one, you want to be on all the chains. As I said, like if you transfer from Ethereum to Terra, then from Terra to Solana, you're going to get the same wrapped asset as on the wormhole network directly from Ethereum to Solana.
Right.
Like no matter which hop you take, you'll always get the same wrapped asset. The assets know which chain they originally come from, what they represent. And this is extremely powerful looking at like a larger set of networks.
Yeah, I remember when I was playing around with Wormhole V1, I bridged some wrapped ETH because it's ERC20 token to Solana, and then I had Wormhole wrapped ETH. And I was like,
Yes.
this is a really unique token I have right here. And I had to kind of send it back because I realized it wasn't quite ready for unwrapping on Solana. But so two great questions from Carl here to finish off. I'm going to be respectful of your time here. But okay, so do you believe the thesis of decentralization will play a dominant role, or is this more idealistic and less pragmatic, given that big banks and investment firms are taking a pretty major role in governance and value extraction?
Oh, of crypto in general. I think that's where do you set the like where's the like magic barrier of where truly decentralized begins?
Right.
I think a lot of these institutions will play major. And I think they will play responsible roles, but as long as they don't get like a major share in ownership, these networks are going to be governed by the masses, by the holders, by people with certain values, which hopefully are in favor of decentralization and censorship. Is it going to hold up on every network? Probably no. There's going to be networks that will drift into like maybe being more regulated, not being censorship resistant potentially. Maybe because they're built for just that reason. But I find it hard to believe that something would happen like this would happen to an ETH2. Like I still believe in this being possible, and regulation and like people taking influence happening not on the core protocol, like on the L1 level or L2 level, but on the application.
Gotcha.
There's this Civic, for example, trying to do like KYC markets on chain. I think this is what I'd like to see regulators get comfortable with versus trying to interfere with like core consensus.
Right, like a Civic, like Vinny Lingham's Civic, right? Like a decentralized identity verification, and using that is a nice compromise for sure. Another great question from Carl. I don't know if you've seen BitDAO, but that was like Bybit becoming this mega DAO invested in by Peter Thiel. I guess he was born in Germany. They're like a $12 billion DAO right now, and it's a little bit vague on their plans. But the reason I mentioned that is, do you believe we'll see an investment DAO competing with Wall Street firms at that level, within the next 5 years?
Within the next 5 years. This is not a space I'm following super closely. So I don't have a strong opinion there. From like what I want to see, yes. I think for most of the last year, friends and I that are active in the space, we've really been hoping to see a new DAO, like at the size of the DAO back then.
Yeah.
But in like a renaissance of that model. There is a bunch of investment DAOs, but I think none has seen as much attention as the DAO did back then. I think solidity and blockchain security has evolved a lot, that something like back then wouldn't necessarily need to happen again. But I love the idea behind it. I know there's a bunch of concepts, but I love to see these things get more attention. I think like I've just been on a panel with Andre Cronje, and he coined the term of like the liquidity locusts, like rushing around between networks and trying to extract as much value as possible, farms and so on. I think as rationality comes back into the market, in terms of you not trying to seek the next farm that might be Ponzi-esque, if things shift to like strong fundamentals again, I see a strong case for investment housing. And why wouldn't they be able, like with current crypto market caps and also stablecoin market caps, why wouldn't they be able to compete with like some Wall Street firms? I mean, tackling the smaller first and then going at a BlackRock. Obviously, that's a different class in terms of like value. Like I think with a BlackRock, we might have like assets under management exceeding the total crypto market cap. I'm not sure. I might be talking nonsense here, but I think there's ridiculous amounts of assets under management. this is the end goal, right?
For sure. And I also think that you mentioned governance earlier, and there's like things like Paladin, which like flash governance loans. I just have a lot of trust in the open source hive mind of everyone working on governance that I don't know what it will be, but solutions will happen.
There's going to be things going wrong, right? There's going to be things going wrong all the time. And I think the space so far has shown that oftentimes people learn from things. Sometimes they don't and make the same mistakes over and over again. But looking at the collective set of all decentralized applications, I think we're on a good trajectory.
Yeah. And so as someone is really close to the multi-chain world, like I guess finishing off here with UST, right? I mean, how do you see UST as a potential to, become like the number one used stablecoin because not even just Wormhole, but also eventually IBC. They're really strategically trying to make that wrap UST be ubiquitous across many chains, like Tether has done a great job of as well.
Yeah, I think UST has, especially in like extremely volatile times recently, has shown a lot of strength. Also because I think the whole philosophy of DAO, like having actual usage for the coin beyond like, I think back at an ESD, DSD, XY, like time where the point of holding your decentralized, non-collateralized stable coin was to hold it and get more. In the expansion. Like I think having actual usage like an anchor savings protocol backed by staked assets, by liquid staking, these models, I think this is a lot more sustainable. I think it's a strong basis. I think the very long-term case for decentralized stablecoins, I think it will show whether they can hold up to even more economic stress, like 2018, like early 2018 level markets. But generally, I feel pretty bullish about the idea, especially behind the model of a UST. And I mean, UST is on a great trajectory as well. If it holds up, then I could totally see that happen.
Amazing. Well, listen, Hendrik, thank you so much for your time. I learned so much about a lot of things today, and I'm sure all the listeners feel the same way. Come back anytime you'd like to speak to us. We got a really nice, well-connected community, primarily in the Ethereum ecosystem, and I'll send you a link to our Columbus 5 bridge when it's ready, which is 12 days away from Columbus 5. So that should be really exciting.
Yeah, I hope it'll happen in 12 days. We're ready.
Yeah, the Guardians are ready for the upgrade there. So again, Hendrik, thank you so much, and I hope you have a great rest of your week. It was a pleasure speaking with you.
Thanks a lot for having me. It was a pleasure as well.